U.S. equities have been a bigger focus of late in light of what many are fearing could be an even bigger declining global backdrop that has the Fed normalizing policy at a time when things are still shaky. And so with stocks holding up for a good portion of Wednesday trade, there was a little more optimism in the air. Where the dust settles into the New York close will, however, be a better indication of just how seriously this recovery attempt is to be taken. On the currency front, the US dollar was bid for most of the day but reversed course into the European close once some of that month-end dollar demand had worked its way through. Eurozone inflation data came in as expected today and didn't prove to have any influence. In North America, data wasn't doing much to move markets either, with Canada GDP coming in a little bit above forecast and US readings producing mixed results. A stronger ADP number was offset by weaker Chicago PMIs. Dollar yen jumped back above its own 113 level, but was met with strong selling pressure from medium-term players still looking for downside in risk assets. Earlier today, the Bank of Japan was out with a policy decision that delivered as widely expected, with nothing of interest to note. There was one currency on Wednesday that was, however, doing its own thing, and that currency was the pound, which emerged as an outperformer after a week of very clear underperformance. Initially, there wasn't anything materially constructive to note, and the move the other way was chalked up to some technical demand arguing for strong support into the latest dip, and medium-term players feeling better about some of the optimism out from the budget earlier this week. But headlines crossed the wires thereafter, opening an acceleration of gains in the pound, with the Brexit secretary quoted as saying a deal was to be expected by November 21st. The pound will be in the spotlight again on Thursday, with the Bank of England policy decision highlighting the docket. Other standouts on the calendar include Aussie trade, Swiss CPI, UK manufacturing PMIs, US construction spending, and US ISM manufacturing. That's all for now.